Hey, good morning. Welcome to the morning brief. Today's Friday. Woohoo! Friday, July 26th. What's going on today? We got some major news. Core PCE price index month over month is zero point 0.2 versus zero point 0.2, so it's as expected, so not a huge burner. Personal income was less than expected, and personal spending was the same as it was before. So very, very mixed results. At 10 o'clock, we have revised University of Michigan consumer sentiment and revised University of Michigan inflation expectations, both at 10 o'clock, and then we're clear the rest of the day. Now, according to the headline, the not core, but the PCE rate was 2.5 versus that's the annualized year over year for the based on the forecast of 2.4. So it was higher than expected. So, of course, the market is going to and will react to that. PCE going up doesn't mean that the Fed is going to cut rates. However, I'll show you a tool here in just a second that is very interesting. One of my students showed this to me recently. It's called the CME Fed Watch tool, and it gives you a guesstimation of, let me refresh it here, see if it's changed any. It has changed very slightly. And what this is basically saying is that go to September. For the September, there's a 89.6% chance, that's actually gone down a little bit. It was 91, that this is the current, that this would be a cut. The current rate is 5.25 to 5.5. So this would be a cut by a quarter point. You can see right down here, it was 91 or some of that right before the PCE report. So large number of people believing the Fed will cut rates by a quarter point as of September. So this is really a cool tool. Here is the link to that, cmegroup.com/forward/markets/interest-rates/CME-Fed watch-tool.html. So if you want to check this out, it's a pretty cool tool. Thanks to Dan, one of my students, for pointing this out. Very excellent place to be aware of what the consensus is for the Fed, what the Fed may or may not do. Moving on, here's the daily chart. So we are gapping up slightly. You can see that I've added a 20-day, a 50-day, and a 200-day down here just to give us a little bit of perspective as to where we could be. We are below the 50-day. That's not too bad, but we want to see that 50-day. We want to see a close above that. Yesterday, obviously, was an ugly, ugly day. Came right down to support and then retraced. So that is a good thing. Whether is this a dead cat bounce? Definitely a oversold scenario. We've had 1, 2, 3 days down. So the probability is very good that we have an up day today. But it is a Friday, and Fridays are insane. Also, we have this kind of large area right here. Remember, that was the Fed gap from way back in June. That finally, all that volume right there finally got filled. So I'm actually going to take that off the chart. So that got filled. We expected that to eventually get filled. Just didn't know it would be that quick. Is what it is. Fridays are tough days, so be careful. Doesn't mean we're just going to stay up today. We could go all over the place. Inventory yesterday, kind of an ugly day yesterday because we had this rally, and then the rally that's very, very bearish. So yesterday's action, very bearish. However, inventory, very, very strong. Inventory was 17,000 to the plus side. Again, this defies gravity, defies logic. What is going on here? I can't tell you. All I can tell you, this is buy the dip. People are saying, we've been down so much. It can't go down any farther. We're going to buy. We're going to buy. And I've said this before. This is very, very dangerous because once these people get underwater, It's a look out below. Yeah, scenarios. There you have it. Intraday, overnight, what do we got? We've got approximately 48 points. 48 points of overnight action. That's a lot. That means we're going to have high volatility again today. Well, we got support. We got some really good support around 54.45. That 45.50 number is really kind of the line in the sand. Below that, it gets ugly. We could definitely see 5400. We've got just above 5431. 5400, not a whole lot of support on this. On the resistance side, definitely some resistance at 5490, 5500. 5500 is probably a level we should be watching, but really it's the 5550 and 5600 to really get going to the upside. So there's a resistance at 5540, of course the 5600, and then we've got a right at 5580. So some good resistance numbers as well as support numbers coming in here. Stock Trader's Almanac for today is 47.6, 47.6, so a negative bias from the historics from the Stock Trader's Almanac. That's all I've got for you today. Have a great weekend. See you guys Monday. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.